Hello there, I hope you're doing well. Today I want to talk about sequential SMT. This is the most important concept in quarterly theory. Sequential SMT tells you when the price is ready to reverse or expand before it even does, or before it even happens. Without it, do not trade. What sequential SMT simply is an SMT divergence between two consecutive quarters. One closely correlated asset runs above or below the previous quarter, extremely high or low. Another asset fails to do the same. That diversion is the sequential SMT. You might not understand what the context simply is, but I will show you how to apply it and how to understand it more deeply. The four rules. First, must occur between two consecutive quarters only. For example, Q1 to Q2, Q1 and Q2, Q2 and Q3, or Q3 and Q4, Q4 and Q1, never Q1 and 3. Let's jump into the charts and show you how to understand it deeply and how to use it. Now, I have everything annotated. This is Nasdaq, this is S&P 500, and this is the quarterly theory um indicator, so to say. Now, if you look at here, Monday, right? This is Monday, first quarter, Q1, and this is Tuesday, all right? Nasdaq took out the Monday high, previous day high, which is the Q high, Q1 high. However, if you look at it on ES failed to do so, made higher low, right? Right there. This is sequential SMT. Why is this powerful SMT compared to the other SMTs? The reason why this is so powerful is because the days separate into quarters. Monday is Q1, Tuesday is Q2, Wednesday is Q3, etc. Now that's why this is exactly super important. And this is basically the previous day high and previous day low. And as you can see on Q3, Q3, which is a Wednesday, we distribute to lower where into the new week's opening. Second, must use the extreme high or low of the previous quarter, not any random swing inside. Let me show you as well the context, what this simply means and how to apply it with real charts. Because my goal here is to make it so easy that you yourself can apply it, not just through text but also through examples. What it simply means is, look, if you focus on the external high, for example, swing highs, all right, like this. Do not be like, all right, you know what? If you zoom in on ES as well, let's remove this on this as well. Be like, all right, let me just focus on here, internal. This is internal. If you look at internal, it also, look, on NQ, this is our high. On ES, that is our high. See that? That is also internal SMT. But however, on sequential SMT, we focuses on the quarters. That is what sequential SMT means. But of course, you can get way deeper into lower charts, such as minutes charts. You will have another quarters. It's all fractal, guys. But if you focus on the swing highs and swing lows, it's way much powerful than internal, focusing only on the internal SMT, such as micro SMT. Third rule, highs and low do not need to form at the same time across assets. Only the level matters. Now, what that simply is, the level matters more than time in this scenario. For example, if you look at this candle, by the way, on hourly, it's all fractal. I can also show you in minutes, on daily, yearly, whatever. Guys, if you look at this candle, this one, the swing low formed. Both of the assets, S&P 500 and Nasdaq, formed at 7 p.m., right? All right, now levels are important. Why? If only you focus on time alone won't be that helpful. Focus also on the SMT as well, on the levels. What time do we form this low? For example, look at the price, not the time, sorry, the price. What price? Where? Did we check out the liquidity? Not, right? If you look at on yes, we did check out that low. See, this is price. Lastly, if we're bullish, one asset closes and wicks below the previous quarter low. Another fails. And for bearish, it's exactly but the opposite way. Let me show you as well what this simply means. With a wick taken out, not by the body. For example, I'm right now on 30-minute charts. This is NQ. This is a swing low. Extend. Same time on ES. However, we did took out it. Alright? Now, did we wick out with a body, closed body? No, by a wick. SMT, but if you look at deeper, is there any body below with closing? No, only the wick. See, the wick does the damage. The body tells a story, baby. Look at that. Beautiful. Main trades. Now, this is what's beautiful about quarter theory. It doesn't matter what you trade. It doesn't matter what market you trade. Indices, forex, commodities, crypto, oil. Doesn't matter, guys. Now, and these are the trades. If you trade on indices markets, just like I do, for example, NQ, ES, and YM, your focus shall be here, right? On NQ, ES, and YM. If you trade on forex, your focus is if you're trading euro, you compare it with US. If you trade pound, you're looking at dollar, etc. Commodities, when you're trading gold, you compare it with silver, copper, or platinum. Crypto, Bitcoin, and compare it with Ethereum, oil, crude oil, gasoline, and whatever. What is a sequential SMT? Now, the manipulation quarter, any quarter that forms an sequential SMT is most likely the manipulation quarter. For example, like we talked about, this is Nasdaq. This high got taken out on Tuesday on Q2. On ES, we didn't. Now, what makes this super powerful is that it's a manipulation quarter, Q2. That is why it's super powerful. That is exactly why the market reversed. The following quarter's distributions of the manipulation confirmed, expect the next quarter to distribute. Exactly, same thing. As we manipulate this high, expect distribution to take place. Any cycle, doesn't matter. And also, what confirms sequential SMT is the high or low of the cycle. Sequential SMT puts in the high of the week, day, or session. Your bias, of course, confirms the sequential SMT as well. A weekly sequential SMT between Monday and Tuesday tells you Wednesday is likely distribution because, for example, let's say we accumulate on Monday and then we manipulate on Tuesday. Of course, what are we expecting after manipulation? Of course, distribution. So expect Wednesdays to be distribution. True open filters. This is important because in my last video I talked about true open filter. I hope you watched it. Bullish sequential SMT must occur below the cycle true open. For example, true micro session open, true day open, New York open, true month open, etc. Whenever we're below, expect bullish, and whenever we're above, expect bearish. Here, bearish sequential SMT must occur above. If the sequential SMT forms but hasn't crossed the true open, it is significantly lower probability. Consider it a warning, not a signal. Multi-stage sequential SMT. For the highest probability setup, stack two stages. Stage 1 weekly or monthly cycle sequential SMT, stage 2 daily or 90-minute cycle sequential SMT in the same direction. Don't jump more than 2 cycles. Weekly to micro is too wide. For example, let's say you're trading on a minute charts. Your focus is on a micro, for example, 90-minute, 30-minute, 10-minute, whatever you have. You do not care about the weekly cycle. You do not care about the monthly cycle. You do not care about the yearly cycle. What you need to pay attention is to the micro cycle. Weekly to daily is fine. If you're trading on daily, of course, pay attention to weekly cycle. Weekly to 90-minute is also fine. Daily to 90-minute is fine as well. News calendar. Anticipating sequential SMT. Rare folder news event injects volatility that often creates sequential SMT. Monitor Forex Factory. I will show you where to look for news, which is on the Forex Factory website. Monday with no news, likely accumulation. Most of the time, I recommend people who are beginners to skip Mondays with no news. Whenever we don't have CPI or FOMC or any high impact news within the week, and Mondays we let's say we have no news on Monday, it's likely to accumulate. And accumulate, we don't need that. It's gonna be low volatility, so we might as well just skip it. Tuesday, CPI, likely sequential SMT and manipulation. This is the move that we want to be in. Thursday, PPI, secondly, which is a news also, secondly, weekly sequential SMT likely, giving the week's reversal. Thursday is Q4, so it's either continuation or reversal. Let's say that we were bullish for the Monday, Tuesday, and Wednesday, and Thursday comes around and we have PPI at 8:30 news. That the markets open, we probably will see distribution directly to the where sequential SMT inside a higher time frame gap, such as fair value gaps, equals even higher probability because that could be your draw. This is Forex Factory website. You can simply come here and then you'll find this. This is our news. Basically, you can also like adjust it. For example, I removed low impact news and medium impact. My attention is on high impact news and also bank holidays. Of course, you can always adjust them and whatnot. And look what your focus should be, what I move. My focus only in USD because I trade mainly Nasdaq, US 100. So yeah, the base of every setup, sequential SMT should be the base of every single setup. No sequential SMT, no trade. It is the only cracking correlation that confirms when the price is ready to move. As you know, I do not enter a trade when there is no SMT, either SMT or sequential SMT. Doesn't matter micro or macro. If there is no SMT, I do not enter a trade. Last but not least, if you have made it till this far, be fucking grateful because many people have clicked off of this video. These people will never make it because they don't have the patience and the courage to keep sticking to this business. Guys, trading is the hardest business in the world. And if you if you learn, if you train your eyes, oh man, completely new worlds will open to you. Now, last time I found this tweet from Trade the Day, I was like, I need to share this with you guys. Now, what he says simply, I promise you that if you look into quarterly theory, what I'm teaching you basically, it will greatly improve your understanding of this market. Now, I don't care what type of trader you are. You probably will be, ICT trader, or you draw trend lines, or you look at volume profile, or whatever you want to, whatever trader you are, supply and demand. Now, quarterly theory is mainly based on time. All right. The strategy within a whole trading system is the only strategy about time is quarterly theory. That is 100% legit and will help you so much and also improve your understanding of these markets. Apply quarterly theory within what you do, within what strategy you're using, or even quarterly theory alone will help you a lot. Guys, just know that if you have made it this far, keep going. And I promise you will have a clicking moment. I don't care after 1 year, even less than a year, or 2 years, 3 years, you will make it. Just keep showing up. And it's all matter of time, right? Hope you got something from this and see you guys next time. Be safe.